84% of retirees are making this RMD mistake. You don't have to be one of them. Smart Asset. Though retirees are only required to take a certain portion of their retirement savings out as distributions each year, a study from J.P. Morgan Chase shows that there is likely good reason to take out or a withdrawal approach based solely on. Continue reading right pointing arrow. The post 84% of retirees are making this RMD mistake appeared first on Smart Asset blog. Below are your comments. First of all, I don't care if I leave money on the table when I die. I don't want to run out of money while I am alive. With that in mind, I retired 4 years ago but have lived debt-free since 1994. Whatever is left in my investments and savings when I am gone will be distributed to my wife and our key. To me, the only meaningful factor is the anticipated tax rate. Withdraw as much as you can if you're in a low tax bracket. Staying within that bracket, of course. Withdraw the bare minimum if you're in a higher bracket. I take the RMD as calculated. I don't need any more, and I still end up at the end of the year with more money in all my accounts. I started, most times. Smiley face. Good planning and budgeting for the past 35 years makes a difference. Seems like a non-issue to me. The RMD requirements are exactly what that acronym stands for. A required minimum distribution. The law says you have to adhere to it, at the very least. However, there's nothing in the law that says you can't take out more, as needed. As long as you're past 59.5. What a confusing and unclear article. If you have retirement saving in well-performing investments, why withdraw more than required? Let the remaining funds continue to perform after minimum withdrawals. The article seems to go against common sense, especially if retirees already have pensions. Society. Next news. Most American couples have this much in retirement savings. Where do you stack up? Smart Asset. A recent study from the career experts SETI says that 40% of respondents fear retirement more than ETH. And almost 9 in 10 responded that their biggest retirement fear is not having enough income. For married couples, planning retirement for 2 people can. Continue reading right pointing arrow. The post-average retirement savings for married couples by age appeared first on Smart Asset blog. Below are your comments. I will be 38 this year, and taking a look at my retirement savings, I am just shy of $250,000. The market has beat me up a little the last 2 years as my investments are collectively down approximately $50,000. However, since I am not nearing retirement, I am not in panic mode. I got here because I star. These national money stories can be interesting, but they are mostly meaningless. The comments hold more info than the story. And in a country of hundreds of millions of people, there are a million different ways to save, spend, and borrow, millions of different lifestyles and millions of different No person knows when their health will enter a steep decline. When that ultimately occurs, be it with either spouse, mathematical planning is thrown out the window. Do you and your partner have more in retirement savings than the average American couple? Yes, we do, but we do not have a huge house, 3 or 4 new cars, and a half-dozen gold credit cards. Sorry to differ, it's not all about savings for retirement, but more about investing for retirement. Invest in income-producing assets like real estate. I make more money now that I'm retired than when I was working. I don't worry about running out of money because the assets are generating in ink. Next news. Exxon Pioneer tie-up could squeeze U.S. shale oil suppliers, pipelines. Reuters. Houston. Reuters, top U.S. oil producer ExxonMobil's planned acquisition of the number 1 Permian shale producer Pioneer Natural Resources could further restrain output growth in the large St. U.S. oil field, squeezing pipeline companies and suppliers, executives and energy advisors said. Exxon, the 5th largest producer in the Permian, has set an up to 1 million BPD target for its operations there for 2025 and more recently pushed it back to 2027. Buying Pioneer would boost its output to about 1.33 million barrels of oil and gas equivalent per day. Why? Well above its goal. Below are your comments. I think Brandon has done more to destroy the U.S. oil production business than all the malarkey reasons given in this article. Consumers take note of high grocery, fuel and housing costs when it is time to vote. At this moment the U.S. is exporting energy and energy production is at an all-time high. I thought the government was supposed to step in and break up monopolies, not watch them get bigger. They should change our name to the United Corporations of America. Is DVN the next target for a takeover? Think the deal will be at $280 PS. That's $65 billion with the extra $5 billion coming from additional XOM cash or a special dividend. Next news. Treasury's best day since March driven by signs Fed may be done. Bloomberg. Bond investors are starting to bet the worst ever rout in U.S. Treasuries may soon be over. Most Ray D. from Bloomberg. Israel latest. Top U.S. general warns Iran to stay out of conflict. Schumer confronts Xi on Israel-Hamas stance in rare meeting. Israel latest. Over 1,100 dead. U.S. sends warships to region. Bank of America's wrong way rate bet hurts Moynihan's growth pledge. U.S. 10-year yields slid the most since March after dovish comments from Federal Reserve officials fueled speculation interests. Below are your comments. Good news for Wall Street. Good chance of no additional interest rate hikes. The bad news, not likely to have interest rates cut for a year or more. Even during the recession that is coming. Every move has advantages and disadvantages. By not hiking rates, they are risking sticky high inflation will go even higher. Treasuries rallied significantly as Fed officials' dovish comments and Middle East tensions led to a flight to safety. Yields on 10-year notes fell 18 basis points to 4.62%, and 2-year yields dropped 16 basis points to 4.93%. The market suggests the Fed may not hike rates this year. Seize the oppo. Market manipulation. They should be in jail. Next news. A massive rally ahead. Daniel Ives says buy tech stocks into year-end. Here are two names that he likes right now. Tip ranks. The September jobs report exceeded expectations with the addition of 336,000 jobs last month, nearly double the amount anticipated on Wall Street. Add that Goldilocks figure to minimal wage inflation, and the scene is set for a soft landing for the economy, says Wedbush's Daniel Ives, a 5-star analyst rated in the top 2% of the street's stock pros. This, in turn, is great news for the tech sector. In fact, with earnings season about to kick off, Ives thinks Wall Street is poised to be caught. Below are your comments. The bulls talk about a rally and the bears talk about a crash. Who should an investor believe? More like massive fraud. The phony market should be shut down and Fed and others sued for market manipulation. These liars and pumpers are dumping stocks while they bleeper the mom-and-pop retail investors into the market. This perma bull is always saying to buy tech stocks regardless of market conditions. Dan Ives is about as credible as Jim Cramer. You mean the same Dan Ives that was guilty of securities and accounting fraud? What a joke. Next news. Rivian stock is dropping. Credibility is an issue. Barron's.com. Wedbush analyst Dan Ives cut his price target to $25 from $32. He maintained his buy rating on shares. Below are your comments. I think the problem is more that Rivian surprises investors. I think they need to communicate better about potential actions they do that could indicate they are falling behind from their plan. They just have bad PR people. Is their business bad behind the scenes? I don't know. I'm still very idiotic. Growth is accelerating, costs are declining, and this raise was actually very well done. Can you get a fundraise right now at 3% for your growing business? Just another hit piece because bad news sells clicks. If you own one of these, sell it now. They are going to be near worthless in the aftermarket. That's what happens when you dilute the shares. Hence EV maker Rivian plans $1.5 billion convertible bond sale. The bottom line is Rivian is burning too much cash. It looks like the Saudi wealth fund is not throwing any more money to keep them alive. Recalls for airbags, seats, seat belts, steering, and suspension. Right out of the gate, oh boy. Next news. Treasury Secretary Janet Yellen tries to calm markets amid historic U.S. bond collapse. Business Insid. I haven't seen any evidence of dysfunction in connection with the increase in interest rates, Yellen told the Financial Times. Below are your comments. Yellen saw a soft landing in 2007 to 2009. So her outlook is quite valuable. Whatever she says, just do the opposite. Yes, Janet, inflation is only 3% and temporary as well. Excuse me, transitory. Remember, this also causes payments on the national debt to rise, less to spend elsewhere, and less of course taxes get raised, which they will, and you get less to live on. Watch for equities to experience a big sell-off as a result of the bond market meltdown. Stock market holders fearful of competition? Need a shoulder to cry on? Why not sell your stock and buy short-term treasuries? Guaranteed by the feds? As usual, they keep talking out of both sides of their mouths. They want to control inflation, but Biden and the party know they can't win unless they keep bleep money into the economy to pay for votes. Next news. Chinese copper tycoon goes missing, believed to be detained by police. Bloomberg. Executives at one of China's largest copper trading houses have lost contact with the company's founder and believe that he has been detained by police for questioning, according to people familiar with the matter. Most read from Bloomberg. Israel latest. Top U.S. general warns Iran to stay out of conflict. Schumer confronts Xi on Israel-Hamas stance in rare meeting. Israel latest. Over 1,100 dead. U.S. sends warships to region. Bank of America's wrong way rate bet hurts Moynihan's growth pledge. Below are your comments. I wonder when Chinese Defense Minister Li Shangfu will return from his CCP attitude adjustment. They have Clintons. Wow, they start getting sophisticated. Hee. CCP created the corruption system in China. Therefore, all of CCP members are corrupt and using our power to make as much money as possible. Every business person in that country need to be on high alert on the government. It calls Jack Ma time by Xi Jinping. Next news. Nvidia will stay dominant, Citi says after report OpenAI may change chip suppliers. Barron's.com. Analysts at Citi see Nvidia continuing to maintain a 90% or so market share in the artificial intelligence GPU chip market over the next 2 to 3 years. Below are your comments. Analysts at Citi see Nvidia continuing to maintain a 90% or so market share in the artificial intelligence GPU chip market over the next 2 to 3 years. This is just incredible. Nvidia should hold 90% of the market for the most important invention since the combustion engine. Nvidia is GOI. TipRanks shows that Nvidia has the potential to hit mid-$600 range within the next 12 months, so this is no surprise and no news. I won't buy Barron's magazine either. How good AI is depends on the coding and the language models. not the chip. AMD is coming for NVIDIA just like they did for INTC. Buy high, sell low. Next news. Are electric cars more expensive to insure? Yahoo Personal Finance. How much does it cost to insure an electric car? Is EV insurance more expensive than a traditional auto insurance policy? We explain. Below are your comments. Good news for Wall Street. Good chance of no additional interest rate hikes. The bad news, not likely to have interest rates cut for a year or more. Even during the recession that is coming. Every move has advantages and disadvantages. By not hiking rates, they are risking sticky high inflation will go even higher. Treasuries rallied significantly as Fed officials' dovish comments and Middle East tensions led to a flight to safety. Yields on 10-year notes fell 18 basis points to 4.62%, and 2-year yields dropped 16 basis points to 4.93%. The market suggests the Fed may not hike rates this year. Seize the oppo. Market manipulation. They should be in jail. Please subscribe to my channel. And if you like it, please thumbs up.